Marksman Capital presents.
This is where it becomes even more interesting. How did Apple have such a great year? This is where we can learn from how they operate their business. And let's dig into the growth trends. So now, even before we go into the growth trends, what are the growth drivers? So in the previous video, we have discussed the secular growth industries driving one another as huge mega ecological structure. Although both smartphone and cloud system are slowing in growth, but they are here to stay, becoming more of a behavior of consumer staples. So now all the industries that are revolving around smartphone and smart devices are positive and projected to be in positive trends for the coming years. Again, I want to be critical in this. These are also growth drivers to one another, with artificial intelligence and 5G infrastructures being the highest in growth potentials. The third will be fintech. I would say cybersecurity, m-commerce, and mobile games have very steady growth and will be even here for a decade or more. So we know that if we look at this number of smartphones sold to the end users worldwide between 2007 and 2021, we know that has been actually a slowing growth. And in year 2019, it has actually went into negative growth territory. So now these are the numbers of smartphones sold to the end users. But how about the subscription numbers? Are they still positive? And of course, if we look at this graph right here, it is still positive. It hasn't been slowed down. It hasn't been in negative territory. And we can see that the projection is around 5 to 3 or even 2% in the coming years as it is maturing. Right, so the subscription numbers are still going up, even up to 2027. Right, so here you get a good picture of all the positive secular trends that we can see. Even social media can be added on this chart as the ninth of the industry that is involved in the smartphone or smart devices market. So step one, let's dig into the growth trends.
Analysis retrieved successfully. Onboarding Striker X now. 3, 2, 1, start sequence.
So step one, let's dig into the growth trends. And the first thing we look at stocks are the consistency. And if we look at these trends right here, for the past 10 years, Apple has been growing consistently for the past 10 years. And businesses that has consistent trend upwards have some kind of moat. And last year, Apple achieved a phenomenal revenue gains of 33%, yet they are already delivering a positive year with 2 quarters into year 2020. For such a mature industry of 5% CAGR projected year on year, Apple truly has championed the industry. And if we look at the cash flow, it has been pretty consistent with such high net margins and cash flow. Apple belongs to the top 1% strongest fundamental companies. And what can we expect from the capital returns? So the capital returns can be a little volatile, but if we average for the past 10 years in the capital returns, we get about 33% returns per year. And we can see that in this chart, if I zoom in a little in this tabulation, you can see some of the years can actually deliver about 88% and 40%. But within 10 years, if we are investing, within 10 years, 15 years time frame, we can expect 2 or 3 negative years within 10 years. And those are like years that we always want to accumulate more before the next year onwards. Because the next 1 or 2 years will be another huge jump in the equities great gain. Right? The market takes time to accumulate and even times for markup. All right, so let's look into the revenue streams. Apple has 5 revenue streams, with smartphone being the largest slice, which is around 52% of the entire business revenue streams. So the rest a bit fragmented, like iPad, iMac, and wearable home and accessories. So wearables, home accessories, and cloud and app services are becoming more of a growth. Right? And of course, we want to see what is happening on the on the revenue streams on these parts. Okay, so now let's dig into the breakdown. So last year, Apple has made about 39% jump in smartphone, and the last time they have made these astronomical jumps are the year 2012, which is 71%, and 2015, about 52% growth. So now what we notice here are these smart devices like iMac and some iPad. So they have been also growing quite steadily. And last year it was about 34% for iPad, 23% for iMac. And both of these, Apple has started as a hardware and devices company, as hardware devices company, and now their apps, cloud services, and other smart devices are steadily growing year on year. And if we put some numbers on these growth numbers right here, we can see it has actually peaked on 2019 and 2020. Even on the year of pandemic, it has actually grown 41%. And it's all time, ever since 2014, the growth has been double digit. All right. And of course, if we look at cloud and services, it has also been double digits all the year uh, ever since 2014. And it has been steadily increasing over time. And this is becoming a bigger part of the Apple's business, which is now closely to around $68 billion. Dollars. All right, compared to wearables and home, it's also a huge chunk, about 38 billion US dollars. So it's pretty huge, I would say. So now, if we look at revenue streams by geography, where they sell the most, right here they sell the most in Americas. Then the second is Europe. The third will be China, and Japan being the fourth in the region. Then the rest will be in Asia Pacific, around 7%. So we can see these trends here are very steadily increasing also over time, each of the pie in every region. So in the US, it's around 23% growth comparing last year. Sorry. And then Europe also has jumped quite a lot, 30% last year. And what is surprising right here is Greater China has actually been growing about 70% compared to in year 2021. So right here, most people will ask, Derek, I thought in China you have Oppo, Xiaomi, and Huawei. You have lots of brands in China, and I thought they're anti-Apple. So, but in this case, we look at facts. In this case, it's not actually is. That it's not actually is anti-Apple. You can see Apple is still growing in China. So again, 70% astronomical growth last year, right? And also the last growth in China, it really shows that it has demand in China, which is around, it's pretty huge. It's almost, I would say it's almost double the jump. This is also more than 70% gains right here in 2015. So they have quite a lot of fans in China as well. And of course, if we look at Japan and the rest of Asia Pacific, it has been also steadily increasing, which Japan is about 33% jump, and Asia Pacific 35% jump. So pretty nice gain over there. So let's talk about growth projections, and this is done by analysts. I just picked one of the site here from Wall Street. Simply Wall Street, it's an app that I frequently use to have a quick look in fundamentals, and also Morningstar at the same time. But for this case, I'll use Simply Wall Street, and so they have projected about 3 years gain, and I have tabulated that for the revenue gains, it's around 13% projected in the next 3 years for each of the year. And net income will be about 5% gain. Cash flow, of course, this is quite a lot. 19% for the cash flow growth, and earnings growth will be 11%. So, wow, pretty impressive for such a company in such a mature industry. There is still double-digit revenues to be, to be gained in the years to come. So yeah, very very impressive. So now that's it for this session. Thank you for your time and happy trading and investing. So Striker X here signing out. If you like this video, please hit the subscribe and like button, and also notification button if you like to get more of these videos. And we also have a Facebook group where we're trading, and we will provide the link below in the description column.